Islamic finance is governed by the Sharia, sourced from the Quran and the Sunnah, which are followed by the consensus of jurists and interpreters of Islamic law. According to Sharia, the Islamic mode of finance should emphasize profit and loss sharing and prohibit fixed returns. In other words, any predetermined payment over and above the actual amount of principal is prohibited. The term capital market refers to any financial market where debt and equity are demanded and supplied. A capital market helps investors find a platform for making their investments and helps both borrowers and investors by channeling funds from those with excess funds to those in need of such funds. Businesses and governments raise funds in the capital market. Simply put, the Islamic capital market is where Sharia-compliant financial assets are transacted. It works parallel to the conventional market and helps investors find Sharia-compliant investment opportunities. In Malaysia, where the Islamic capital market first got its legs, the Securities Commission of Malaysia has a Sharia Council that is specifically responsible for Sharia-related matters of Islamic capital market activities. In time, regulatory agencies in other nations where the Islamic capital markets are thriving may follow suit. To most world population, Islamic capital market is gaining tremendous acceptance and momentum. For example, the Islamic bond market or the Sukuk market represents a key component of the Islamic financial system. The Malaysian Islamic bond market has made significant progress since the first Sukuk issued in 1990 by a multinational corporation operating in Malaysia. According to data from the Securities Commission, in July 2018 alone, Malaysia's capital market reached 3,244.65 billion ringgit or $783.89 billion. Sharia-compliant assets accounted for 60.57%, equivalent to 1,963.31 billion ringgit. This is up 3.7% from 1,893.47 billion ringgit at the end of 2017. While much has been achieved by Malaysia in particular, much yet remains to be done. Well, in this short documentary, we are going to uncover some challenges as well as prospects of the Islamic capital market in Malaysia. In the first part of this video, we will be exposing some key challenges to the Malaysia's Islamic capital market, while later in the second part, we will be describing some useful prospects of the Islamic capital market in Malaysia.
The development of the Islamic finance in Malaysia has been growing and have attracted interest from both Muslim and non-Muslim over the past few decades. Since its inception of slightly more than 3 decades ago, Malaysia has been contributing to a significant growth to the industry, which is mainly driven by the Islamic capital market, particularly in the Sukuk market. The Sukuk market development in Malaysia has transformed the Islamic financial landscape at the national and international levels over the past few decades. While there is a rapid growth in the industry over the years, there was a slowdown in the Islamic market back in 2008 due to the global financial crisis. Although the aftermath of the financial crisis did not impact the Islamic market significantly, the confidence of the investor was badly shaken by the crisis, hindering the growth in the Islamic capital market. After the crisis, it has led to a greater recognition on the importance of liquidity raise and the need for evolution on the regulation framework. In 2014, the global oil price started to drop and has impacted the Islamic capital market in Malaysia. The demand of the Sukuk market has weakened, resulting in a sharp decline of Sukuk issuance by Bank Negara. The impact of the weak global oil price outlook has taken a toll on the Islamic financial market, resulting in a single-digit growth in 2015 and 2016. Apart from the global financial crisis and oil prices, other macroeconomic conditions such as inflation and fluctuation of interest rates may also impact the Islamic capital market locally. The demand for Sharia-compliant products has been growing over the past few years in the Islamic finance industry. However, there is still a lot need to be done to make the Islamic capital market to be more competitive. There is a need to develop a more innovative and variation of products to cater for the increased demand from the market. However, there is still a lot need to be done to make the Islamic capital market to be more competitive. There is a need to develop more innovative and variation of products to cater for the increased demand from the market. However, the trend of innovation in product development has not been encouraging in the Islamic finance sector. Most of the banks tend to adopt a more conservative approach by replicating the conventional products instead of inventing new product concepts. In view of this, there are limited product options and lack of Islamic hedging instruments, which has become one of the main stumbling blocks to a more robust Islamic structure. Therefore, it is important for the Islamic finance industry to embrace innovation and develop new breed of capital market products for better risk management and to strengthen the Islamic finance structure.
Sukuk or Islamic debt instrument represent the second largest asset class in the Islamic financial industry, accounting for 13.5% of the global Islamic finance asset as the year end 2011. A sukuk is an similar Islamic financial certificate similar to a bond in the conventional market that complies with Sharia principles. The amount of sukuk outstanding in the same year is equivalent to 178.2 billion, with a record amount of new issuance worth 85.1 billion in 2012. The sukuk industry has maintained an exceptional momentum over the past 5.5 years, achieving a CAGR of 28.3%. Malaysia remained the largest issuer to date with more than 231 billion worth of sukuks issued at the end of June 2012. The comparative total of CGC sukuk issuance until the first quarter was 92.4 billion. Despite the strong growth momentum of the Malaysian sukuk market, there are still many controversial issues that require solutions in order to sustain the growth and development of the sukuk market, such as short supplies of eligible underlying asset for sukuk and diversifications of the sukuk instrument. The cooperation among the Sharia financial experts plays an important role in order to address the issues to further strengthen the development of the Islamic capital market. The development and growth of the sukuk has been encouraging in Malaysia. However, there are still a lack of deep and liquid secondary market for sukuk, which was among the challenges faced by the Islamic capital market. In the domestic bond market, 60% of all new issuance are held for investment. Thus, creating a somewhat illiquid market, the Islamic finance industry shall consider to split the new sukuk issuance into various tranches to enable increased participation in the future to further drive the growth of Islamic capital market.
Sharia is an Islamic law derived from the teaching of Quran and of Muhammad. It is not a list of rules, but rather a set of principles on aspects of life, including marriage, divorce, finance, and rituals such as fasting and prayers. Hence, there are differences in the interpretation of Islamic scholars and the practice of Sharia among Muslim countries, including Saudi Arabia, Kuwait, the United Arab Emirates, Pakistan, Malaysia, and Iran. For example, in Kuwait and Saudi Arabia, zakat is an obligation for Islamic companies to pay each year as compared to UAE, which is not a mandatory. In the event when two Islamic countries are merged, it will result in companies having to pay double zakat charges. In Islamic law, from financial and investment aspect, the main concern is the moral or ethical value of the commercial transaction. The law are mainly governed by the rules and regulation in the respect of halal permissible and haram prohibited. From the Sharia compliance perspective, in the capital market point of view, the key element to equity funds is screening criteria used to determine the status of the company in each investment to be made from the available funds. The screening criteria must ensure that the companies are compliant with Sharia principle and teaching of Islam. Presently, there are many screening methodologies being developed and approved by Islamic scholars from institutions around the world. However, there is lack of standardization to manage the difference among the countries worldwide, and there is no international Sharia screening guidelines. In Malaysia, there are specific criteria used by Sharia Advisory Council (SAC) of the Malaysia Securities Commission to approve the list of Sharia compliance company. The SAC has considered several measures in classifying the companies under permissible category by adopting the level of tolerance benchmark. The benchmark used to determine the tolerable level of mixed contribution derived from the permissible and non-permissible activities towards the company revenues. However, some Islamic scholars has raised concern on the financial ratio justification of the benchmark, which debatable among the scholars. In conclusion, the screening process to a certain extent reflects the flexibility of Islamic law despite its finality, especially in commercial contracts where most are still not conclusively decided.
Sharia expertise is an individual that able to advise on Islamic capital market governance implementation differentiated between Sharia and conventional market practices. The Islamic capital market globally emerging and reaching the potential as conventional market, thus there are increasing demand of Sharia advisors. Interesting facts that non-Islamic jurisdiction country is also promoting Islamic securities product. In 2017, UK alone recorded 20 Islamic banks offering Islamic finance services and traded USD 728 million on net assets of Islamic funds in UK. To be a certified Sharia advisors, individuals need to fulfill Security Commission requirements set out by ASIS Sharia Advisory Councils. The challenges of Sharia expertise are: first, limited number of experienced mujtahid since it requires high level of knowledge to discuss on Sharia matters. Second, to be agile with industry change. Economy change rapidly, so does Sharia experts, to be updated with current industry situation globally. Number three, provide unbiased opinion to ensure compliance to Islamic principles and Sharia framework. Number four, there is a tension between the quality versus quantity as the demand grows, but there are pressure to provide capable Sharia experts. Number five, able to develop latest and competitive products to be offered to the market. And the last one, in Malaysia, Securities Commission is responsible to provide training in upskilling Sharia advisors and practitioners, inclusive financial institutions. To advocate potential target market and practitioners on Islamic capital market is one of the biggest challenge. Basically, there are a lot of benefits and advantages regarding Islamic securities that are hidden to be published to public, such as tax incentives and the performance of Islamic stock itself, which is better compared to conventional market. But people still skeptical about Islamic finance due to the negative perception and misinterpretation on the religion itself. This will hinder potential market to invest in Islamic securities. Globally, OIC is the main body actively creating awareness and communicate information related to ICM. Malaysia is the most largest Islamic securities traded around the globe, and Malaysia is highly involved through Malaysia International Islamic Finance Center in providing advice to OIC members, as Malaysia also is the earliest country in practicing Islamic finance. Some of the OIC responsibilities in communication information on ICM are: number one, the overview and structure of Islamic capital markets. Second, new products, for example, Islamic ETF, REITs, and other new asset class. Number three, sukuk products. Another one is unit trust and also Sharia compliant rules and practices.
There are two prospects for Malaysian Islamic capital market. Well, first, there are existing markets and new markets in the global Islamic capital market. The existing countries are Malaysia, UAE, Bahrain, Qatar, Brunei, Indonesia, Pakistan, and Sudan. We have many potential new markets identified, such as United Kingdom, Hong Kong, Singapore, Thailand, Japan, and the United States. Currently, there are over 300 Islamic financial institutions in more than 75 countries, though they are mainly concentrated in the Middle East and in Southeast Asia, but are also gaining popularity in Europe and the United States. It is estimated that the industry will grow at a rate of 15 to 20% annually from current assets of $300 billion. Furthermore, exploring new markets can be realized more efficiently when there is cooperation with various institutions that conduct research in Islamic finance, such as IDB, OCIS, and IIFM, to name a few. Malaysian government has also put their effort to further grow and strengthen Islamic market in Malaysia through government framework and Islamic market blueprint. The blueprint represents Malaysia's focused and concerted efforts in leveraging its well-established Islamic fund management industry to grow the wealth management segment. As part of the holistic development of Malaysia's Islamic markets and consistent with the Capital Market Master Plan 2, the blueprint will also drive greater internationalization of the Islamic fund and wealth management industry through enhanced cross-border capabilities and connectivity. The blueprint has identified strategies and key initiatives to strengthen Malaysia's positioning as a global hub for Islamic fund and develop the country as an international provider of Islamic wealth management services. The blueprint also aims to establish Malaysia as a regional centre for Sharia-compliant sustainable and responsible investment, or SRI, leveraging Malaysia's position as the largest SRI market in Malaysia.
In accordance with Islamic law, Islamic financial products are based on specific types of contracts. These Sharia-compliant contracts support productive economic activities without betraying key Islamic principles as some conventional financial products do. Sharia-compliant contracts cannot create debt, cannot involve the payment of interest, and must provide for a sharing of risk and responsibility between the involved parties. The contract-based regulatory framework under Islamic Financial Services Act (IFSA) the opportunity for Islamic banks to expand their product offerings beyond the traditional debt-based products. The 11 Sharia standards, which have both Sharia and operational requirements, will provide greater clarity in Sharia parameters to guide the industry in product innovation. These standards, comprising debt-based contracts, equity contracts, leasing and ancillary contracts, and arrangement, are expected to facilitate the Islamic financial institutions in diversifying their spectrum of products and services. This will also help the new Islamic product be relevant in the market. There is now an increased awareness of Islamic capital market here in Malaysia, and even globally are looking to either facilitate or try and accommodate Islamic finance, a demand of Islamic market. Many of the Muslims become more aware of the obligation and are moving toward a Sharia compliance product, so that ABDUL has brought a new liquidity for money managers to tap onto. Many of the non-traditional Muslim countries are jumping as well into the foray, and in particular we have seen and heard and even read countries like Japan, Thailand, South Korea issue banking Islamic license too. It is an excellent opportunity for Islamic finance because there isn't a depth of product, there's need a deployment of such funds, and this economy will drive us the next century or so. For that reason, these countries are positioning themselves to try and attract these funds. Basically, if you see any financial product that are debt and equity traditional be very easily accepted, simply it mimics the fixed income. Islamic finance industry has grown tremendously and is now not only confined to Muslim majority countries, but also beyond the traditional boundary into new territories. In conclusion, Islamic financial system has potential to become the agent for the implementation of the objectives of Sharia, as it resides within the financial path underlined by the nature of Sharia rulings. As we have outlined the challenges and the prospects of the Islamic capital market, there are still more work to be done to increase its awareness in the financial capital market.